total of 2.75 trillion pesos as of the end of October, as it continues to raise money to fund its COVID-19 pandemic response programs. Now, in October alone, the Bureau of Treasury borrowed nearly 146 billion pesos. That was a 78% drop from the same month in 2020 on the back of declines in onshore and offshore financing. Borrowings in the 10 months to October also dipped by 6% from 2.92 trillion pesos during the same period of last year. Now, for 2021, the government targets to hike its financing to 3.07 trillion pesos. So far, government debt has accounted for 91% of the borrowing plan for this year. The government borrows from both local and foreign sources to finance the budget deficit that has widened since the start of the pandemic. The budget gap is expected to hit 9.3% of GDP this year. And the OCTA research team says that the Omicron variant might reach the Philippines by February of next year. OCTA research member Guido David says past variants found their way to the country a few months after they were first detected overseas. That's why David says the holidays are still safe for now, but the threat lingers coming into next year's elections. Meanwhile, the interagency task force is expanding the red list of countries effective until December 15th on the back of growing concerns over the Omicron variant. Austria, the Czech Republic, Hungary, the Netherlands, Switzerland, Belgium, and Italy are now part of the Philippines' red list. Already on the list are African countries South Africa, Botswana, Namibia, Lesotho, Zimbabwe, Eswatini, and Mozambique. This means that persons coming from these countries within the last 14 days, regardless of vaccination status, are not allowed to enter the Philippines. Feels like deja vu, but indeed, all projections are now thrown out of the window. The question is whether this is a knee jerk reaction or the beginning of yet another prolonged sell off just when we were hoping for a year end rally. But let's take a quick step back and just take a look at the number of cases here. And if you see on my chart, you can see the Philippines still, nevertheless, staying put below 1,000 new cases per day. There are signs of hope amid all of this negative releases of news. The World Health Organization, of course, called this strain a variant of concern. But so far, according to two South African experts, including the doctor who first sounded alarm about Omicron, indicated that the symptoms so far have been mild. There have been no severe cases. And there's, of course, this possibility of what they call vaccine escapism, whether this, new variant would escape the vaccine. But some vaccine manufacturers, particularly Moderna, saying they are agile enough to respond with a new vaccine by Q1 2022, should it be needed. You've also got Anthony Fauci in the US reassuring Americans that the existing vaccines are likely to provide a degree of protection against severe cases caused by this Omicron variant. But if you take a look, of course, at the equity space, particularly the airlines, this is the Bloomberg Airline Index, and you can see that just plummeting in the past 3 days, down by more than 11%. Of course, apart from the Philippines that we have mentioned having travel bans, many others are doing travel curbs. The UK introduced mandatory PCR tests for all arriving passengers, self-isolation. Israel closed to inbound foreign nationals for 14 days. British Airways halted flights to Hong Kong, and Singapore and Japan are among the countries that have said they're considering tighter border restrictions. Just this month, this Bloomberg EMEA Airline Index is down 18%. And take a look at the bloodbath over in the equity markets. It's a sea of red following last Friday's tanking. Of course, this was post the Thanksgiving holidays over in the US. That was the worst post-Thanksgiving performance since 1941 and the biggest one-day percentage loss in 9 months. And let's take a look at Asia Pacific. Just so painful since 8 in the morning. I've been watching that closely. The Nikkei 225 down by 0.9%. But just to highlight that this is at least not as bad as what we saw in Friday when all that news came out. And the Philippines is one of the worst performers in Asia, down by 3.7% in just the first, less than like 10 minutes of trade. We are back to 7,000 levels here. So a lot of uncertainty happening on this point, just to show how this big this deal is. Bloomberry, for instance, the casino player, down by 10.2%, followed by Mega World, which has, of course, retail outlets, malls. You've got Jollibee, people starting to dine in already, among the worst. And again, the Pure Gold is the sole one in the green. Of course, this happened to be as well the star player during the lockdowns of the pandemic, as people started buying only essential goods. Now, here to chat with us, it's Edser Trinidad, FVP and Head of Investment and Research at First Metro Asset. Good morning, Sir Ed, and welcome.
Good morning.
Sir, what na? Ano na ngayon? I mean, a lot of difficult news to have to digest over the weekend already. But we were hoping at least that by today, by this week, we would have a little bit more clarity. Which direction do you feel this is going to go? Of course, with so many things, so many moving parts still.
Yes, as you mentioned, it's deja vu again. I think for the next couple of days, the market will remain volatile as the market will continue to digest any information about Omicron, whether this will have a far-reaching effect on travel, on the infection rate. So I think until we can get any some clarity about this new variant, we may be seeing the market will continue to um, be volatile.
Now, I wanted to take a step back and look at how our index has performed, at least in the past couple of years, because this has been happening already for almost 2 years. And
Mhm.
every time there's a new variant, of course, a major sell off. But also, we do know from experience that, those waves come and go. And then we do see a recovery. Are you seeing, at least from past performance, historical performance, that there's been a floor anyway, and that there will be a support level at some point, or is this still catching falling knives?
It's like I think there are still a lot of uncertainties. It's really hard to determine what would be basically your support at this moment, considering that there are still a lot of moving parts that we have to, I think, determine. I think, nevertheless, if we can get any some sort of additional a glimpse of positive news, like what happened, as you mentioned, there are two doctors that have said that so far the infection has been mild. If we can get some additional clarity, we may be seeing the market reaching its near its support.
Do you feel that Filipinos will stop celebrations over Christmas, or do you feel the same optimism as Okta that this might come in February and people are still welcome to at least enjoy the holidays? Or do you feel that this will have a staggering effect on consumption in what should be our most important month?
I think I tend to agree with Okta. We haven't yet detected and the variant entering our shores. So in terms of some positive sentiment, we may be seeing still some sustainability of this. I think if you've gone during the weekend, you've seen volume of traffic have really improved. In fact, we're basically near pre-pandemic levels. I expect that this may continue for the next couple of weeks. I think this sentiment may change once there are some signs that Omicron variant has already entered our country.
Okay, what about the properties space here, which is of course very linked to retail players going back to work? Are you seeing, them having to bear the brunt of this yet again, or do you feel that they've been resilient in the past? They've managed to quickly turn around whenever the cases decline, for example, and we did see some of the malls quickly reopening. Just recently. Do you feel that investors are giving them the benefit of the doubt?
I think definitely because of this news, there will be some knee-jerk reaction. So aside from property, other cyclical names will also be affected. And as you've presented on your presentation, in terms of the good performers, It's basically going back on consumer staples.
Okay.
But I expect that the property market can easily rebound once we can get additional clarity that this variant may not be as, I think, as infectious or as severe as everyone is yeah, basically the major concern.
Okay, of course, we're all hoping for that clarity. We're all hoping that that does happen. But in the meantime, you see a major sell off in the likes of airlines, which has just already had some space to breathe. How do we know if this is an opportunity for buying in? How do we know whether to believe in these cyclical stocks and these highly battered stocks already? Should we actually be thinking that this is an opportunity to enter?
I think for the next couple of days, I expect that there should be some additional sell-off from the sectors. However, once um, I think there's a big decline on the sector or number of names. I believe that it may be an opportunity for you to accumulate these names.
Mhm.
Again, as I continue to mention, there's still a lot of moving parts that we still have to, I think, determine. But once we can get additional clarity, and I hope that it will be positive, then I think I expect that these sectors can easily bounce back.
Okay, and just to note that Cebu Pacific is down by 8% in just the first 10 to 20 minutes of trade, so definitely being affected here. Are there any sectors that are going to be the bright spots yet again? Maybe telco players. We did see Pure Gold, you mentioned, and if so, or are these already fully priced in? They've already enjoyed the peak of the pandemic, or are you seeing these coming back into the limelight?
I think because of this news or a lot of uncertainty, consumer staples and telco will be back in the limelight. Although these two sectors had been historically had been one of the best performing sectors during this kind of event, I expect that this will continue. Um, and I think, uh, especially for the telcos, even though we are looking at more, let's say, an improved outlook, I think telcos will remain to be a staple in anyone's portfolio.
What's shocking here, Ed, is that even telcos are being sold off this morning, down by 2.8%.
Yes. Yes.
It
I
doesn't
think yeah, in terms of relative performance, telcos will may remain. I think will do better as compared with the rest.
generally, when you look at the Philippines versus other countries, it seems to be the case that the Philippines has been harder hit by this, even if we don't see the variant yet here. I mean, officially, diba? Why
Yes.
is that the case? Are we just considered a more risky market play compared to others? And how does this affect the foreign fund flows? Will they be, selling off yet again? Will we be seeing an exodus?
I think there are two factors why, in terms of swings, we're basically have a wilder swing as compared with our other markets in the region. First of all, our liquidity. Our market is small, so any selling, just whether just very small selling activity that will come from the foreign investors, it will have a big impact on the performance of a market. Second, if you are going to look at our weighting, country weight, um, I think our country weight right now is less than 1%.
Mhm.
Or and if ever, let's say for a global fund manager looking at with a portfolio of stocks in other markets, then considering that we only have a very small weight on the benchmark, then he would opt to sell our market and be focusing more on the bigger markets.
Okay, so some uncertainty there given the foreign funds, but as you mentioned, maybe there is a possibility that the consumption will still be robust, particularly during this Christmas season. But as you mentioned, stay cautious when it comes to investing right now and entering in the markets until, of course, more clarity comes to the fore in terms of this new variant. Thank you so much. That was Edser Trinidad of First Metro Asset. Checking in on the biggest headlines, NEDA says key economic sector operations are starting to inch towards pre pandemic levels as mobility restrictions continue to be relaxed. NEDA Secretary Carl Chua said fast food chains are now at 78% of pre pandemic levels, improving from the 69% in October and 25% in September of 2020. Shopping malls are currently at 63% capacity, with weekend crowds reaching 81%. Airline operations have also increased by 16% in September. That's compared to the same period of last year. Chua said the country would likely recover to pre pandemic nominal GDP by early 2022, with further easing of restrictions and opening of the economy. He added that economic trends show that the country will likely reach or exceed the reduced 4 to 5% government GDP growth target. And this from the Philippine Star. The World Bank says the Philippines still has the potential to rise as an economic powerhouse in the region in the post COVID world. World Bank Country Director Ndiame Diop said the Philippines will likely rebound solidly this year before gradually recovering moving forward. Diop added that countries like the Philippines started the pandemic with a very good fiscal position and high credibility in credit markets. He said recovery in the short term will depend on vaccine rollout, budget utilization, and monetary policy support. And that's a first look into the business day. Today is Monday, November 29th, 2021. Catch Business World Live for the market close. It's at 3:15 p.m. today. I'm Danie Laurel. Mask on, wash hands, stay safe, Philippines. We are One News.